Welcome back to Bonnie's Life, where we cut through the noise and get straight to the facts. If you're looking for hopium, you're on the wrong channel. But if you want to understand what's actually moving the markets right now, you're exactly where you need to be. Today, we are diving deep into the crypto markets. We're looking at the short-term, mid-term, and long-term setups. We're breaking down the technicals, the fundamentals, and the global events that are shaking up everything from Bitcoin to the oil in your car. Let's start with the big picture. We just closed out Q1 of 2026. And let me tell you, it was a bloodbath. It was the worst opening quarter for crypto since 2018. Bitcoin lost roughly 23% of its value. And the total crypto market capitalization slid by about 22%. As of today, April 2nd, 2026, the global cryptocurrency market cap is sitting at $2.38 trillion. That's down 2.8% in just the last 24 hours. The 24-hour trading volume is hovering around $111.9 billion. Bitcoin dominance is at 56.2% and Ethereum is holding at 10.5%. Now let's talk about sentiment. The fear and greed index is currently sitting at 12. That is extreme fear, my friends. Yesterday it was at 8, which was the lowest we've seen in weeks. When the market is this fearful, you have to ask yourself, is this a time to panic or is this a time to pay attention? Let's look at the liquidations. In the past 24 hours alone, we've seen nearly $400 million in futures positions liquidated. That's a 17% increase from the previous day. We saw $349 million wiped out in just one 24-hour window, with $251 million of that being long positions. Ethereum actually led the liquidations with $96.5 million, closely followed by Bitcoin at $95.7 million. The Bitcoin funding rate has fallen into negative territory. Open interest in futures has dropped 4.4% over the last 30 days to $103.7 billion. Traders are piling into bearish bets, and the market is feeling the pressure. So, what is driving all of this? It's not just lines on a chart. We have massive global events colliding right now. First and foremost, the US-Iran conflict has been ongoing for about 5 weeks now. This has sent crude oil prices surging to record highs since the pandemic. Brent crude is trading around $106 a barrel, and West Texas Intermediate is just under $100. The de facto closure of the Strait of Hormuz is disrupting global energy markets. Even if the war ended today, experts like Helima Croft from RBC Capital Markets say it would take 3 to 4 months to fully restore crude oil production. This surge in oil prices is driving inflation, which means the Federal Reserve is keeping a hawkish stance. The CPI is sticky at around 3.1%, and the January PPI came in hot at 0.5%. The Fed has no room to cut rates. In fact, traders are starting to price in the potential for rate increases. Then we have the Liberation Day tariffs anniversary. It's been 1 year since President Trump imposed reciprocal tariffs on over 50 countries. The average tariff rate soared past 21%, and goods from China were briefly hit with a 145% tariff. While the administration promised these tariffs would bring back jobs and wealth, the reality a year later is that they have contributed to higher prices and weaker economic activity. The trade deficit has actually grown, manufacturing has lost jobs, and there's a massive $166 billion refund issue looming. All of this economic uncertainty is weighing heavily on risk assets, including crypto. But it's not all doom and gloom on the fundamental side. We have a massive regulatory catalyst on the horizon, the Clarity Act. This is the most comprehensive U.S. crypto framework legislation ever proposed. A bipartisan deal was reached on March 20th, and the Senate Banking Committee markup is expected in mid-April. Ripple CEO Brad Garlinghouse puts the odds of passage at 80 to 90%. If this gets signed, it would be the single largest regulatory unlock for institutional crypto capital since the ETF approvals in 2024. XRP and Solana are positioned to be the primary near-term beneficiaries of this clarity. Now let's get into the technical analysis. We'll start with Bitcoin. As of right now, Bitcoin is trading around $66,831. It opened April at roughly $66,500. The key level everyone is watching is the 0.236 Fibonacci resistance at $69,171. This level has kept every recovery attempt since the crash in February. We also have a critical support level at $64,888, which is the neckline of a head and shoulders pattern. If that breaks, we could see a 14% correction. The RSI is currently neutral, and the bearish momentum on the MACD has stalled, which provides a constructive setup for a potential upside move. However, we have to respect the historical data. Bitcoin closed Q1 with 5 consecutive red monthly candles. The last time we saw that was between August 2018 and January 2019. Furthermore, after a start this bad, Bitcoin has never finished a year positive. Some analysts are setting an $88,000 ceiling for 2026, based on these historical West opening patterns. Moving on to Ethereum, ETH is currently trading at $2,061. It is holding just above a crucial 0.236 Fibonacci support level at $2,052. This floor absolutely must hold. If it breaks, we are likely looking at a test of the $1,742 base. The network activity remains strong, with over 788,000 daily active addresses, but the price action is heavily correlated with the broader macro environment. Let's look at XRP. It's currently trading at $1.30. Having faced rejection at the 0.236 Fibonacci resistance level of $1.36 and 47 cents, XRP is highly sensitive to the Clarity Act developments. If we get positive news on that front, expect a significant breakout above that resistance. And finally, Solana. SOL is trading at $78.98, sitting just below its 0.236 Fibonacci level of $80.93. The upcoming Alpenglow upgrade is the primary fundamental catalyst for Solana in Q2. If it can reclaim and hold above $81, it has room to run. So, how do we trade this? Let's break down the strategies for different time frames. For the short-term traders, the day traders, and scalpers, the market is highly volatile and news-driven right now. Your primary focus should be on the key technical levels. For Bitcoin, watch the $64,888 support and the $69,171 resistance. If we break below $64,888 with volume, look for short setups targeting the low $60,000 region. If we push up to $69,171, watch for rejection and potential short scalps or a confirmed breakout for a quick long trade. For Ethereum, the $2,052 support is your line in the sand. Long bounces off that level with tight stops or short a confirmed breakdown. Keep a close eye on the funding rates and open interest. With funding rates negative, a sudden price spike could trigger a short squeeze, providing rapid upside momentum. For the midterm traders, the swing traders looking at weeks to months, you need to balance the technicals with the upcoming macro events. The FOMC meeting on April 28th and 29th is massive. If the Fed maintains its hawkish tone due to sticky inflation and high oil prices, risk assets will continue to struggle. However, the Clarity Act is the wild card. If it passes, it could trigger a significant rally, particularly for altcoins like XRP and Solana. Your strategy should be to accumulate near major support levels, like Bitcoin in the low $60,000 or Ethereum near $1,750, and take profits near major resistance. Do not get caught holding the bag if the macro environment deteriorates further. Watch the US-Iran conflict closely. Any de-escalation could lead to a drop in oil prices, easing inflation fears and boosting crypto. For the long-term traders, the investors looking at years, the current extreme fear in the market is historically a buying opportunity. Yes, the Q1 performance was terrible and the macro headwinds are strong, but the fundamental adoption of crypto continues. The potential passage of the Clarity Act would provide the regulatory certainty that massive institutional capital has been waiting for. The spot Bitcoin ETFs, despite recent outflows, have permanently changed the landscape. Your strategy should be dollar cost averaging into high conviction assets like Bitcoin and Ethereum during these periods of extreme fear. Ignore the day-to-day noise and focus on the long-term trajectory of the asset class. Now, before we completely wrap up, let's take a deeper dive into some of the specific indicators and what they mean for the broader market context. I want to make sure you have all the tools you need to navigate this environment. We talked about the MACD and the RSI, but let's look at the moving averages. The 50-day moving average for Bitcoin is currently acting as a dynamic resistance level. Every time we've approached it over the last few weeks, we've seen selling pressure step in. This is a classic bear market characteristic. Until we can decisively break and hold above the 50-day moving average, the trend remains down. And what about the 200-day moving average? This is the line in the sand for the long-term trend. Right now, Bitcoin is trading below its 200-day moving average, which is a significant bearish signal. It suggests that the long-term momentum has shifted. However, we have seen periods in the past where Bitcoin dips below the 200-day moving average, only to violently reverse course and start a new bull run. This is why the $64,888 support level is so critical. If we lose that, the next major support isn't until the low $50,000 region. Let's also talk about volume. Volume is the lifeblood of any market move. Right now, the volume is relatively low compared to the peaks we saw earlier in the year. This suggests a lack of conviction from both buyers and sellers. The market is waiting for a catalyst. It's waiting for the Clarity Act or the FOMC meeting, or a resolution to the US-Iran conflict. When that catalyst arrives, we will likely see a massive spike in volume, and that will dictate the direction of the next major trend. And we can't ignore the broader economic picture. The Liberation Day tariffs have fundamentally altered global trade dynamics. The US is increasingly isolating itself economically, which has profound implications for the dollar and, by extension, Bitcoin. If the dollar weakens as a result of these policies, Bitcoin could benefit as a non-sovereign store of value. However, if the tariffs lead to a global recession, all risk assets, including crypto, will suffer. This is why trading right now requires a nuanced approach. You can't just look at a chart and ignore the news, and you can't just read the news and ignore the chart. You have to synthesize all of this information. You have to understand how the macro environment impacts the technical setups. For example, let's say the Clarity Act passes. This is a massive bullish catalyst. But if it happens on the same day that the Fed announces a surprise rate hike, the market reaction will be muted. The bullish news will be offset by the bearish macro environment. Conversely, if the US-Iran conflict de-escalates and oil prices plummet, that's a huge bullish macro catalyst. If that coincides with Bitcoin breaking above the $69,171 resistance level, we could see a massive short squeeze and a rapid move higher. So, what is the actionable advice here? For the short-term trader, agility is key. You must be willing to change your bias on a dime. If the technicals break down, you short. If they break out, you go long. Do not marry a position. Use tight stop losses and take profits quickly. The market is too volatile to hold on to losing trades hoping they will turn around. For the mid-term trader, patience is your best friend. Wait for the high probability setups. Wait for Bitcoin to test major support or resistance levels before entering a trade. Do not get chopped up in the middle of the range, and always keep an eye on the economic calendar. Do not hold a large position going into a major news event like the FOMC meeting unless you are willing to accept the risk of a massive gap against you. And for the long-term investor, conviction is everything. You have to believe in the long-term thesis for crypto. You have to believe that Bitcoin is a superior form of money and that Ethereum is the foundation of the decentralized web. If you believe that, then these periods of extreme fear are opportunities, not threats. You use them to accumulate more assets at lower prices. You don't panic sell when the market drops 20%. You zoom out and look at the multi-year chart. The reality is that the crypto market is maturing. It's no longer just a playground for retail speculators. Institutional capital is here, and it's driving the market. The spot Bitcoin ETFs have brought billions of dollars into the space. The Clarity Act will bring even more. This institutionalization means that the market will become more efficient and less volatile over time. But we are not there yet. We are still in the transition phase, and that means we will continue to see massive swings in both directions. As a trader, you have to embrace this volatility. Volatility is opportunity. It's what allows you to make outsized returns, but it's also what can wipe out your account if you're not careful. That's why risk management is the most important skill you can develop. It's not about how much money you can make on a single trade. It's about how much money you can keep over the long run. I want to thank you all for tuning in today. I know this was a deep dive, but I believe it's crucial to understand the full picture. The crypto market is not operating in a vacuum. It's deeply interconnected with the global economy, geopolitics, and regulatory developments. By understanding these connections, you can make more informed trading decisions and position yourself for success. Remember, none of this is financial advice. This is just my analysis based on the data available today. Always do your own research and consult with a professional before making any investment decisions. If you found this analysis helpful, please share it with your fellow traders. The more educated we are as a community, the stronger the market will become. And don't forget to check out the links in the description for more resources and tools to help you on your trading journey. We will continue to monitor these developments closely and provide updates as the situation evolves. The next few weeks are going to be critical for the crypto market. We have major technical levels being tested, massive macro events on the horizon, and the potential for game-changing regulatory clarity. It's a trader's market, and there will be plenty of opportunities for those who are prepared. Stay focused, stay disciplined, and I'll see you in the next episode. This is Boni, signing off. Peace.